Hello, this is Ahura, and I'm here with you with the global economic outlook in the week ahead, which will be the 23rd week of the year. However, before going and see what we will have in the next week, first we will check what we had the previous week, what we had last week, and how they affected the market, and then we can check the week ahead. Last week, generally from Asia, if we start from Asia, we didn't have such a good news in Japan. We had a lower industrial production number. Inflation was in line with the expectation of 1.9% in Tokyo. Industrial production, as I told, fell by under zero. It's not just it was not just a positive, it was not just a zero, it was a negative. Industrial production fell by 0.1%. In China, PMI numbers, they were both for manufacturing and service PMI, they were less than estimates. And interesting, the manufacturing PMI fell again under 50 expansion levels, which is not a good news for Chinese economy. Now, the 5% GDP expectation for 2024 is under question. And in Europe, the overall data that we had from the Europe, they were a little bit positive, a little bit better. Yeah, we had some negative data, some such as German retail sales, but overall data from the Eurozone and Eurozone members, they were fine. And inflation in the Eurozone increased by 2.9% for core CPI, and overall CPI increased by 2.6%. Both of them, they were higher than estimates and higher than previous months as well. And in the United States, while at the first days of the week, we had more speeches from Fed members and emphasizing on more hawkish policies, and then we had a civic consumer confidence increasing about 100 from 97 to 102. That the pressure on the stock market increased, and US dollar gained somehow at the first days of the week, but in the last day of the week, where the market focus was on the US PCE price index, personal income and expectation, and we saw that income fell by the real income in the United States fell by 0.1%, while inflation increased both for core CPI, core PCE, and PCE. Both of them, they increased in line with estimates and somehow confirmed that the inflation is under control. At the first glance, yeah, it was a positive data for the inflation, showed the inflation is under control. So US dollar full stock markets increased. But for the first days of the week, in the next week, we don't expect to see this trend to continue, because still they show that the inflation for PC price index and core PC price index at 2.7% and 2.8% is still so high and higher than 2% Federal Reserve target. So, which means that at the first days of the week ahead, we will have reverse and some sell in stock markets, most probably, and regain in US dollar chart. But in the week ahead also will be interesting week. With first of all, I have to mention that today and tomorrow we have an OPEC meeting, which will be very important for the energy market, especially for the oil market. OPEC and OPEC Plus meeting will be in Jeddah in Saudi Arabia. At the last minute, Saudi Arabian king invited the oil ministers from OPEC members to go to Jeddah, to go to Saudi Arabia and discuss about the more plans in more detail. Market expect to see that the oil supply cut that they have already till end of June, to continue this supply cut I think it was 2 million barrels a day till end of 2024, at the first months of 2025. Most probably they will do that, which can support a little bit from oil market. On Monday, we have inflation numbers from Turkey, but the market will focus on the Chinese manufacturing PMI. Manufacturing PMI expected to increase a little bit. Most probably, we will have the manufacturing PMI around for Saxon, we will have around 151 and some numbers around that. But on Monday, market at the US season will focus on ISM manufacturing numbers and as well as the market numbers for PMI. Construction spending in the United States, ISM manufacturing PMI, and ISM manufacturing price, they will be most data that we will have on Monday. For US PMI numbers, both for in the ISM survey or in the market survey, we are expecting a little bit weaker data. So just mention that. Overall, in the US, I will tell more later. Overall, in the US, in the week ahead, we do not expect such a positive data. Most probably, we'll have more negative data and more pressure on the US dollar, most probably, because with this negative data, USD, with this negative expected less and weaker data, most probably US Federal Reserve will start rate cut from September, which can be positive for stock markets and negative for US dollar index. But still, on Tuesday, market will focus mostly on European numbers. We will have German labor market data. And then in United States on Tuesday, we will have a GLTs. GLTs, if you remember, it was more than 11 million, just like 7 or 8 months ago. And now it fell under 10 million and then under 9 million. And now we're expecting to see under 8,500,000 GLTs number and that, which means that less opportunities in the stock market, in the job market in the United States, as also we're expecting to see the quit numbers to decrease. When more people they leave their job, it means that they have a more hope to find a better job. And when you see that the less people they leave their job, they quit their job, it means that they have a less options for the new jobs or better job, or even better, not just only better, sometimes better job, sometimes a job with the more payment, even it's not a better job, but with more payment. Anyway, when you see that the quit numbers, it's less, it means that the job market is not good. When you see the quitting numbers, it's more, it means that the people, they have more opportunities to find a job, so the job market is fine. We are expecting to see the quit numbers leaving the number of the people that they leave their job to fill, also the GLT is also to become less under 8,500,000 job leaving. On Wednesday, market will focus mostly on the Bank of Canada meeting. We know that the Bank of Canada will be one of the first central banks that they will cut the rates. Inflation in Canada has been falling in the last months, while economic data also was not so good. So which means that the Bank of Canada can cut the rates by 25 BPS from 5% to 4.75%. On Wednesday, we have too many other data, such as Russian numbers also for Russian labor market data. Labor market data, the unemployment in Russia is still stay at 2.7%, and we are expecting to see the 2.7, 2.8%. It's very low, mostly because the war condition that the US in Russia, there are more people and more men, especially they are in the front line in war with Ukraine. On Wednesday, we also have the ISM manufacturing and ISM non-manufacturing data. This non-manufacturing, same as the manufacturing, we are expecting to see a little bit lower digits than previous months, which means that the weaker economic data again in the United States, and most probably we can count more on a first rate cut on September by Federal Reserve. On Thursday, market will focus mostly on ECB meeting. The European Central Bank will have a monetary policy meeting and interest rate decision on Thursday, where now this is under question that if they will cut the rates or not. Till a week ago, it was more than 60% chance for a rate cut. But as we know, in the last 2 weeks, we had better than expected PMI numbers, while last week we had the inflation number as well. And we saw that inflation for both headline and core inflation, both of them, they increased by 0.2% compared to months ago, which means that the central bank in Europe will have a hard job to decide what to do. If they cut the rates, they will give a more chance to higher inflation in the next months. But if they do not cut the rates, European economy will get more pressure, which is not a good news for the stock market. So now we have to wait and see what ECB policymakers they will do, but most probably still to support the stock markets and to support the production. Most probably they will cut the rates by 25 BPS, but still, as I told, there's a chance now it's 50-50 chance. On Thursday, as all Thursdays in the United States, we will have initial jobless numbers, but and continuing jobless numbers. But since on Thursday, Friday, day after that, we will have the U.S. labor market data, NFP numbers. Market probably will ignore the Thursday's initial jobless claims. On Friday, before going to the United States, in Japan, we will have the household spending. Household spending in the last months in Japan has been falling. Now we're expecting to see 0.6% increase, which means that Japanese. Don't forget that this number is nominal numbers, so nominal numbers, which means that inflation is not adjusted in this number. So with the higher inflation that we had in the last 2 months in Japan, to see 0.6% higher spending in a household spending is normal. So it's not doesn't mean that the people in Japan started to spend more. It's just a nominal number. In China, we will have import and export data. Last month, we had a jump in Chinese import number. The China usually mostly they import raw materials, so which means that if they import more materials last month, it means that they're gonna have a more export this month and next month. So don't forget to focus and follow these numbers on Friday, but still in European season, GDP numbers also will be important in Eurozone, but focus on Friday will be on unemployment numbers and totally on labor market in United States. We expect to see NFP, new created job, something between 190K till 200,000 newly created job in May, and unemployment rate to remain and stay unchanged at 3.9%. But if you have a more NFP numbers above 200,000, it can help the US dollar, but will pressure the stock markets. But if we see lower digits, if we see less than 190,000 created job, can be positive for stock market and pressure the US dollar, as that means the central bank United States will start rate cut a little bit faster, and they will give a more chance for rate cut in September. Don't forget that on Thursday we will have a Russian central bank meeting also, which is expected to hold the rates at 16%, and we have a Mexican inflation on Friday, as well as also in Mexico we're going to have election this week, which will affect the Mexican peso and overall Mexican stock markets. That's the most important data we had the last weekend. We're gonna have this week. If we check the charts, let's review the charts as well. This is a Bitcoin chart in a crypto market. I say, as I said, let's say that in inflation, higher inflation is one of the main reasons that the people they go and buy the crypto, same as why they go and buy the other. And when the overall market condition is not good and we have a more risk in the markets, the people they take their money and from the stock markets and they put somewhere else, which the crypto again can be one of the choices. Overall market condition right now, they support the stock market, the crypto market, and as long as the Bitcoin is trading above 62,000 US dollar, the trend is positive and can continue further. US dollar index moves between 104 and 105 mark in the last 2 or 3 weeks, which is expected to see in the same range as long as we do not have a clear signal on what Federal Reserve will do. To understand what Fed more possibly will do, we have to wait until Friday this week to see the NFP numbers. But generally, at the first days, probably we have recovering US dollar index to around 104.60 or 105. But at the last days of the week, it's going to depend on the NFP numbers. On the stock markets, overall downtrend is still remain unchanged. If we go, where is the S&P 500 here? SP 500, here's the SP 500. Overall downtrend is unchanged. He's remained here, and as long as we are under 5,200, we can go more we can go more further, more deep, see deeper numbers. But the key support sits at 5,150, around 150.60, around this level. And if the price fell lower than this number, we can go further. But still, from the fundamental point of view, now if we are expecting for more weaker numbers in the week ahead. In the week ahead, if we have a more weaker number, means that Federal Reserve will have a more chance. The market will give a more chance for rate cut of Federal Reserve rate cut on next week, Wednesday, which can support the stock markets and pressure the US dollar. That's the overall market condition. From the oil, as I told, the OPEC and OPEC Plus gonna have a meeting today and tomorrow in Saudi Arabia, and probably they will continue. They will extend their supply cut of 2 million barrels a day till end of this year, which can be the positive news this week for oil market and generally for the energy market. This overall market condition. If you had any other question, please don't forget to write down under this video in Instagram or YouTube. I will try to get back to you as soon as possible. See you. Bye.